Welcome back. You're still with us on Markets Today. Let's go over through the rest of the headlines that we're tracking for you. The fourth headline is higher costs incurred to comply with the second phase of BS6 emission norm regulatory norms have forced auto companies to announce price hikes. Hero MotoCorp joined the list of auto companies by announcing a price hike today, a 2% hike from April 1st. Maruti soon followed suit. However, Maruti has not specified the quantum of rise as of now. And this comes after Kia and Tata Motors had raised their prices. Eicher Motors Volvo Trucks VECV is also mulling a 2 to 5% price hike. Speaking to CNBC-TV18 earlier today, Vinod Agarwal of Eicher Motors Volvo CV said that there will be a price hike, but the quantum of price hike is unlikely to be as much as what the company had taken due to the change in the earlier BS norms. This one would be more or less 2 to 5%. Listen in.
Cost increase this time is not like earlier BS4 to BS6. The cost increases are less. Therefore, we are also expecting the price hike of around 2 to 5%. And then, of course, there is also some inflation impact because April, every year the price increase happens. It's not that in April, so it's a normal price increase plus the impact of BS2 step 2, BS6 step 2.
Let's get to the fifth headline then. Gold shines after U.S. Treasury Secretary Janet Yellen says there will be no blanket insurance on bank deposits, reigniting fears of a banking crisis. U.S. Fed signaling a rate hike pause also supported the yellow metal. Manisha is here with more. Manisha.
Well, the gold prices have held quite firm right now. 25 basis points, as expected, has been the interest rate hike delivered by the U.S. Fed. The decline in U.S. dollar index below 102 clearly has been supportive here. And even as we have seen gold come off its all-time highs in the Indian markets that we saw in this week itself, the decline in prices have led to buying in physical and in gold ETF markets there. So the investment buying seems to be coming back right now. With the kind of inflation scenario that we are working with, speculative buying also on the supportive side, the expectations are that you could be looking at newer highs in case of gold prices in the coming 3 to 4 months as well. For the international markets, after hitting a high of $2,010 per ounce, while we have been chasing or trading within that range of 1940 to 2000, the street believes that every time gold prices come down, it is a buying opportunity. Given the fact that there are still our geopolitical tensions, we still have the Russia-Ukraine war on, the dollar index has declined, the rates while are on the higher side, so is the inflation, and then other asset classes haven't performed so well. So you have seen smart money move into gold and silver, and is the reason you could be looking at supports continuing.
Thank you for that. Moving on to the oil space, crude prices softened following the U.S. Fed's decision to hike rates. However, prices are still up 4% this week. Manisha is back with us with the details.
Oh, well, yes, the crude oil prices are holding with 4% gains in this week, and we have been able to sustainably hold above $75 per barrel. The support comes in from the fact that the U.S. Fed moved in expected lines with 25 basis point of a rate hike, and the commentary is seen cautiously dovish there. The other thing is that the U.S. inventories, while have shown an increase in crude, but they have shown a sharp decline in the product inventories. And on the other side, while the markets are awaiting for the OPEC and allies meeting, which is on 3rd of April, the expectation is that they perhaps would not do too much in sense of moving the supplies, but the comments from here as well is something that the street will watch out for. The other thing is about supplies itself, where we have seen a decline in supplies from US itself since the beginning of this year, and the Russia, while is managing sanctions, also has said that they will cut supplies starting the month of March. The final numbers are yet to come in, but the street believe that with the Chinese demand added to that, you could be looking at some support continuing in case of the crude oil prices. So whether it's Goldman Sachs, Bank of America or Citi, all believe that the crude prices could be averaging anywhere between 80 to 88 barrels on the higher side for the rest of this year.
With that, it's a wrap on this edition of Markets Today. Thank you for watching.
Powered by